Good morning and welcome to the trade setup right here on BloombergQuint Live. It's an edgy week, and therefore what the markets do at the opening hour may not be true for the closing hour, as we saw yesterday as well. But let's try and set up what are the cues for today's session. US markets didn't have a very bad close. In fact, they ended almost at new records, so to say, and did reasonably okay, you would have to admit, with the way the markets moved in the session yesterday, especially in the second half. So the second halves are becoming terribly important for all bourses, isn't it? So there's the same case with the US markets in trade yesterday. So that is part one. The interesting thing is, and this is something that we're now starting to see across markets, is that value seems to be outperforming growth. Look at this chart, which shows how emerging markets in general have seen value growths beating growth stocks for 5 straight weeks. And actually, if you scale the data back maybe to a few months as well, on a monthly basis too, you probably see a number of instances where in select pockets, value is outperforming growth. But this chart was beautiful, isn't it? 5 straight weeks, and in the bounds that we are seeing, so to say, value is outperforming growth. Can that be the big shift for the rest of the year as well? And therefore, should you align your portfolios that way? I think time will tell. By the way, I must tell you that if indeed rates are indeed going to inch up, and if you have US stocks exposure, then maybe, just maybe, rotation towards out of tech into some of the others might have been a great idea, say 6 weeks or 8 weeks ago, isn't it? Everything from Apple to Twilio to Amazon, etc., is all down. Be that as it may, let's focus on trade again today. I get a bit carried away at times. The trade is not too bad. I think the early Asian rises were ho-hum. Some were trading flattish, some were trading in the green. So you'll probably have a start which is not bad. The question is, can it last? Remains to be seen, because I do think that until tomorrow that the Fed policy is out, the markets would remain a bit on tenterhooks. The SGX Nifty should probably be indicating the same thing. So we'll have a start which is marginally in the green. The question is, can we build on from there? Now, the good part, or the only good part about this thing, is that we had a fairly decent recovery of sorts in the second half of trade yesterday, and therefore this only builds on to that move, and therefore that should be positive. Now, that's my key point, right? What's the trade setup for the day, for the week? It is a week dominated by central bank action. It's not just the Fed, by the way. RBA, I think, has a meet. BOJ has a meet, and therefore large central banks, if they talk anything about yield curve control and what is it that they speak about the yields, could well determine what the next few weeks or months would be from a central bank policy action, and therefore what kind of volatility it causes. And volatile times we live in. There's this wonderful chart in a story that Dr. C.K. Naran has written on the Bloomberg terminal. And if you can just pull this story a bit lower, you will see this is the chart. Look at the Nifty futures volatility since Feb 24th, and it tells you a story. I mean, so if you read the story, by the way, the circular gaps, and I hope you can see that on your cell phone. So if you can, the circles are the areas at which there were gap up or gap down openings, and then you see the extent of volatility that is marked on the Nifty futures since Feb 24th. So we are living in extremely volatile times, and a startup, the positive side, need not mean that long positions can be created, and simultaneously a gap down need not mean short positions can be created, as short traders would have found out yesterday. Midway through trade, if you had initiated a short, you'd have been caught with your pants down, so to say. So it's just that difficult, and believe me, viewers, volatility will be the name of the game for the next 48 hours at least, arguably 72 hours, until Jerome Powell's press conference happens. Because keep in mind, and I'll speak about this in detail tomorrow, but I'll just give you a sneak peek, that the US markets will gyrate a bit on the dot plots, and then might change a bit if Jerome Powell chooses to reassure markets. And even if that happens, will the markets get reassured? I don't quite know, because Janet Yellen has been crying her throat out. But I don't think the markets are paying heed to any kind of reassurances from the Fed or the officials. So let's wait and watch. And institutions were net sellers, by the way, yesterday. Just that brief mention, 1,100 crores on the FI side, 750 crores on the DI side. So, the recovery was there, but maybe it was some bit of short covering or profit taking on the short positions. Let's wait and watch. I think the next few days will give an answer about whether the trend is on the down or on the upside. Let's talk about specific stocks then, because finding a trend is damn difficult. So a few stocks that I think could be interesting. Some of them are repeats from yesterday because actions might be today, but I'm just laying them down out for you. Adani Ports is the first one. This is very interesting, viewers. They've received an LOI from the Ministry of Ports and Shipping in Sri Lanka for the development and operations of the West Container Terminal in Colombo. Remember, for all of you who have even the remotest of interest in geopolitics, Sri Lanka has been virtually under China's domain for quite some time. Now you have India's largest private ports operator going out there and getting a stranglehold on one of the key container terminals. The terminal will be developed on a BOT basis for a period of 35 years. The port will be developed to reach a capacity of 3.5 million TEUs. This is big. This is also big from a geopolitics perspective, but I would reckon that for Adani Ports to have gone ahead and done this with their partners in a favorable port environment in Sri Lanka only adds teeth to what Adani Ports is trying to do. 30% of India port capacity, something in Bangladesh or Myanmar, and something in Sri Lanka. They are going global, all right. This should be viewed positively, I would reckon. Even if not immediately, this should be viewed positively for the company. This is big news. So watch out for Adani Ports today or over the next few days. Tata Communications. Now, remember I spoke about this yesterday. The D-Day is today. They'll sell 16% stake. The initial plan, 10% of the equity. OFS for the non-retail investors open today, and for the retail investors tomorrow. The floor price is at a 9.8% discount. The question and the key question, would the stock trade at a discount, and would the discount be bought into? Now think of it. The treasury stake sale in BPCL happened. The stock traded at a discount for a few days, and since then has bounced back. The cues are very different, of course, for a BPCL. There is other things at play, including the dividend meeting today. But you want to, Tata Communications is a strong stock in a strong space. You would want to see, very interestingly, if indeed this gets bought into very, very quickly or no. So interesting day today for Tata Communication, or interesting next few days for Tata Com. IPO update, Kalyan Jewellers opens for subscription, an 800 crore issue, price at 86 to 87 rupees per share. Most notes that I said, that I read, suggested that you could give the issue a skip. There are others in the play, which are probably far better from an IPO perspective. Of course, if you have money, if you want to put into a Kalyan Jewellers, great. But I was reading a Motilal Oswal note, by the way, which said that if you indeed want to play the jewelry theme, a better way to play it would be Titan and not Kalyan Jewellers. So that's the long and short of it. I don't think the company is making money as well. It's a loss-making company, if I'm not wrong, in the last year. So whether you want to take the leap of faith depends. There are a few institutions which have done that. I think Sundaram Mutual Fund has been an anchor investor, if I'm not wrong. But I mean, 2-3 notes that I read suggested that there are better issues at hand, and if you want to play the jewelry theme, Titan might be a better play. At least the Motilal Oswal note seems to suggest that. So do watch out. Be careful when you choose to park in the money. Wait against all the other IPOs as well in fray right now. There are 3 open currently, and 1 will open tomorrow. So Anupam Rasayan is open today, is open currently as well. I think today is the last day for it. There is Lakshmi Organic, which opened yesterday and will last till tomorrow. Nazara opens tomorrow. And in the midst of all of this, you have Kalyan Jewellers. Pick and choose smartly, please. Last but not the least, of course, like I said, BPCL remains in fray. And I just want to revisit this note that I mentioned yesterday because it is important. A dividend of 60 rupees per share is unlikely. So if somebody's told this to you, you heard it on a news channel or read it in an article, please don't believe it, because the EGM to approve the Numaligarh refinery transaction is only 25th. I doubt they can preempt all of this, and therefore that may not happen. Can they do a board meeting subsequently? Sure. But from immediate perspective, from today's perspective, a 60 rupees dividend is unlikely. However, if indeed the dividend is 26 rupees per share, which JP Morgan is saying, then you have the futures price and the stock price, which will converge, and the futures will not trade at a discount because the dividend will be higher than 5% of the current market price, which means if you're a future buyer, your lot gets adjusted automatically. It's an NSE rule or an exchange rule or a SEBI rule, whatever, what have you. And therefore, don't be under this impression that a large dividend would mean futures would trade at a discount, and therefore don't buy the futures, even after the dividend, if you will. And if you believe indeed that the dividend will cause this stock move in the first place. So lots of permutations and combinations, but I want to lay it out for you because this is arguably a really important day from a BPCL trader perspective. So do watch out for this one. And then there are a few stocks that all of us should keep in mind based on the price and volume action there and the delivery patterns there. So, I mean, Webber Global is a stock that's baffled me all through, but it's a stock that's done tremendously well in the last 12 to 18 months. I think it's gained 4 or 5x. So you have to keep that in mind. We have the bit of a typo there wherein we've put in the percentage again along with the stock name as well as in the column, but that's fine. You still understand what we're trying to say. Eris Life Sciences, 5.9% gain, 62% delivery. Sterling Wilson, 9.4% gain. Yesterday was among big gainers, 40% mark for delivery. So also Indian Energy Exchange, it's gaining traction big time and 40% mark for delivery. And Polymedicure, don't quite know too much about it, but up 5%, 35% delivery. So a bunch of stocks that all of us should be keeping in mind. All in all, expect volatility to be the primary factor. And please keep in mind, don't be excessively leveraged in the next 2 days because the Fed meeting will likely cause very sharp moves in the market. Could be upside, could be downside. You don't want to caught on the wrong foot on the index, at least, if not specific stocks. So please be careful with regards to that. Thanks so much for tuning in, and please wear your masks when you go out. Stay safe.